Welcome to another S&P 500 analysis. Today is May 14, 2022. The S&P 500 bounced after it had made a new 52-week low last Thursday. Did the S&P 500 hit bottom, or was it just another dead cat bounce? In this video, we'll look at the market sentiment, the market internals, and the price action of the S&P 500, along with the other major market indexes, and see what they are telling us. Stay tuned. Before I begin, I need you to smash that thumbs up to help me promote this video on YouTube. And if you are looking for an unbiased view on the market, then click on the subscribe to subscribe to this channel. And be sure to click the notification icon to turn on notification so you won't miss any of my future video. Let's start with this weekly chart of the S&P 500. We had another huge range week. For the week, the S&P 500 had a range of over 222 points. And it lost 99.45 points, or 2.41%. At the low of the week, it lost almost 265 points, or 6.4%. A lot of this loss was recovered on Friday's 2.4%, or 94 points gain. As you can see from this weekly chart here, the S&P 500 been down 6 consecutive weeks, and it's been one-time framing down for 6 weeks. It also closed below the 10-week and 40-week moving average, and both of these moving averages are sloping down. And also, the weekly price action formed a hammer with a long wick. And the weekly price action also continued to be forming a lower low, along with a lower high. So based on these technical, the weekly price trend is still down. Now let's go and take a look at the sentiment and the internal and see what they are telling us. Look at the sentiment chart here. The VIX is still inside of this 20-30 zone. So the market participants are still quite fearful, although it's not as fearful as earlier in the week when it was above this 35 area. And also the put-call ratio did went above 1, but it came back in, although it's still above this 0.75. So right now we are still seeing the market participant are still being cautious and risk off. Now, looking at the internal, the New York Stock Exchange, we're looking at this up-down volume ratio on Monday. It was 16-1 in favor of the down volume. And looking at the daily advanced decline, more than 2,600 more declining issue than advancing issue. That means there's more than 90% of the stock traded in the New York Stock Exchange was declining in price on Monday. Then on Tuesday and Wednesday, we still continue to see some downside. On Thursday, we saw a turnaround, although the S&P 500 closed down for the day, but we actually saw a positive up-down volume ratio, and it was 1.38 to 1 in favor of the up volume, and also there were 30 more advancing issue than declining issue. Then on Friday, we got that follow through on the late afternoon turnaround from Thursday. We see that the up-down volume ratio was almost 11.5 to 1 in favor of the up volume, and also the advance outnumbered the decliner by 1,973 issue. So that's quite a turnaround. And looking at the New York Stock Exchange new high, new low, notice on Monday it was 1,070 stock, make new 52-week low. And on Tuesday it was 912, on Wednesday 790, and then on Thursday 1,055. Then on Friday there was the 205 stock, make new 52-week low. Then throughout those days, on Monday there were only 13 stock, make new 52-week high. And on Tuesday, 6. On Wednesday, 14. On Thursday, 3. And then on Friday, 12. So you can see there's quite an extreme here on the number of stock making new low versus number of stock making new 52-week high. Now, as far as the New York Stock Exchange cumulative AD line here, we saw a little bit of a positive divergence here on Thursday, and then we got this follow through on Friday. So we're going to keep an eye on it to see will there be more follow through on the S&P 500. And later on, we're going to take a look at the internal, a little bit more of an expanded view, and then see if we glimpse an additional clue of what we might be expecting in the near term for the S&P 500 and also the Nasdaq 100. And here looking at the Nasdaq Internal, as you can see on Monday, the up-down volume was not as extreme as the New York Stock Exchange, although there was still 5-1 in favor of the downside, the down volume. And look at the advanced decline over 3,372 more declining issue than advancing issues. And similarly on Wednesday, there were 2,912 more declining issue than advancing issue, and it was 4.2-1 in favor of the down volume on Wednesday. Now then we saw on Thursday a little bit of a turnaround, similarly to the New York Stock Exchange, the S&P 500. We saw there was 1.9-1 in favor of the up volume, and 440 more advancing issue than declining issue. Then on Friday, we see a surge of up volume over down volume with a ratio of 8.1 in favor of the up volume, and also 2,399 more advancing issue than declining issue. Now here's the other extreme. The extreme is the new high, new low. As you can see, similarly to the New York Stock Exchange, the Nasdaq market also have quite an extreme of number of stock hitting new 52-week low. On Monday, it was 1,711 stock made new 52-week low. And on Tuesday, it was 1,376. And on Wednesday, 1,549. And on Thursday, 1,701. Then on Friday, it contracted to only 310 stock made new 52-week low. Now, going back and take a look at on Monday, there were only 23 stock made new 52-week high. And on Tuesday, 20 stock. And on Wednesday, 16. Thursday, 11. And on Friday, 13. So you can see over 1,000 stock make new 52-week low, and only 10, 20 stock make 52-week high. So that is quite of a contrast and quite of an extreme. Now, similarly to the New York Stock Exchange, the Nasdaq cumulative AD lines also show a little bit of a positive divergence, and we saw a follow through on Friday on that positive divergence. Now let's go back and take a look at a broader picture of the new high, new low, starting with the New York Stock Exchange. As you can see, you see all these extreme level of number of new low outnumber the new high. And same here, and it's all near the major low. Here recently, we're seeing these whole bunch of extreme here. So if you could see here, if we look at the extreme, and we can see that there is a positive divergence, right? As the S&P 500 closed at a new low, we actually saw less number of new 52-week low, and then it's starting to turn. Now that's after a series of extreme number of stock making new 52-week low, as you can see on the spiking number here, over 1,000 issues. And similarly to the pandemic sell-off here, right? You can see the whole bunch of stock making new 52-week low, and then when the S&P 500 made a new low here, that we saw much less number of stock making new 52-week low after the extreme. And we're seeing that in the recent week here. You see this extreme, see these number of stock making new 52-week low, and also we see a little bit of a divergence here. All right, so right now we're going to be keeping an eye to see will this come down when the S&P 500 make a new low here. Let's say you take out this low here and see will the 52-week high, the 52-week low will come down or come up with this extreme number once again. If it doesn't, and we're getting this positive divergence, then we could conclude that this could be a intermediate low. In other words, we could get a nice bounce back up. This is a some kind of clue to tell us to beware of the recent extreme. We could have seen a flush internally on the market already. So when we see the next low on the S&P 500, it could be the sign to look for a reversal back up if we're seeing a positive divergence from some of these internals. And similarly, looking at the Nasdaq, this extreme level is near the major low. Same here, okay, likewise. So we are looking at the recent extreme number here, and we see that it is coming up. So next time we want to take out this low here, will it give us a extreme number up at the 1,000 plus number of stock making new 52-week low, or would it be much less, like on Friday here, only a couple hundred? Then that will give us a clue the recent sell-off could coming to an end. So right now, based on the sentiment and the internal, it still seems to indicate that the market participants are still quite fearful, although not as fearful as in the last couple of weeks. Now I'm going to continue to use the weekly chart as I did for the last few weeks. Just basically want to take a look at the broader picture of the price action. So as you can see on the this daily chart here, we are looking at this weekly hammer candle here that got formed last week, and also notice the low of the week was almost got into that bear market, got a nice bounce, and right now for next week we'll be watching to see what it come back up above this 4114.65, essentially this pivot low here that it took out, this very low, to see would it be able to come back up and get above it, or would it just back test this, chop around, and then make another move back down and put in a new low, take out this low here, and that may be the final flush before we get this thing to come back up a little bit more upside. So we'll be keeping an eye on that to see how this will be handled, this level, if price come up, or how is this low is going to be handled when it come down. And for the Nasdaq 100, it also put in a long wicked hammer here, and at the low of the week, it actually was a little bit over 30% from its all-time high. Now it did close back up. Remember this 27.2%, this 272 at 12,050. It came down and actually tagged this 50% retracement from this swing here, from the low, the pandemic low, to the all-time high. So it came down to a little bit under this 50%, got a nice bounce. So for the coming week, we want to see would it be able to come up and essentially test this low here at 13,026, back test that low and see how that handle, would it encounter resistance and pushes back down. And if it pushes back down, how is this low going to be tested? Would it come down to this 414 at 11,541, or would it come down to this 618, 10,589 level? That last flush, is that's going to be the last flush before we get a nice bounce back up. So those are a couple of the key levels to keep an eye on, right? This right here, this pivot low, and also this low here, last week's low. And here on the Russell 2000, the Russell 2000 also came down to this, remember we're looking at this 1724.90, right? Come down, and also this pivot high here. So you can see that it came down, got a nice bounce back up. So once again, there is this 38.2 at 1888.70. So we're going to see would it be able to bounce back up to this level or get up, back to this 1935 area and see how would that be handled, or would it get another push back down and take out this 1725 and push us down to this 618 at 1536. So those are the level to keep an eye on. And for the Dow Jones Transportation, it came back into bear market territory. Last Friday's close was 20.86% from its high. So that put it back into the bear market territory. So once again, we're also looking for a possible bounce to see what it get back up here at this 15,057. And if it doesn't, then we basically are looking for a retest of this low, taking out this low, and possibly come back in to this zone here, and this 272 at 13,014.54. And for the Dow Jones Industrial, it's also from its low, it was down at 15.53% from its all-time high here, and also finished with a hammer type of candle. And here we see that it took out this low here, the February low, and it trying to bounce back up above that. So once again, in the coming week, we're going to see would it be able to get back above this 32,272 and possibly make its way back up here to this 34,000. But if it failed to move up and come back down, then watch this low here from last week's low, because we're basically still looking for this thing to come down to fill this gap. And then there is this 38.2 at 29,794. So essentially 30,000 and then 29,000. So those are the two downside level to keep an eye on. And for the New York Stock Exchange Composite, it is in a correction territory. Last week's low was more than 15% from its all-time high up here. Now it did also trace back to the major move of this value area range here. Okay, so it got in the this major move at 15,223, and right now it's trying to bounce back up and back test this 15,775. So be keeping an eye on this level here to see would it be able to get above that and move back up to this 16,094. If it's unable to do that, then we're essentially looking for this thing to come back down and retest this low here and possibly get down to this 14,183 or this 38.2, somewhere near this 14,000 area. And here looking at the 10-year yield, we see that the 10-year yield actually tried to get up to this high here at 3.248%, and then it unable to get there and pull back. So it finished with a outside weekly candle here. So kind of keep an eye on that next week to see would it come back down to this 2.75%. I wouldn't be surprised to see it come back down and test this, essentially 78.6 level. Remember this cup and handle, and the major move here is essentially this 30 or 3%. Right now with this 127 extension, we're looking at a 3.36 or 3.37%. So we're basically targeting 2.5%. But first, we're gonna keep an eye on this 3.25. And looking at the U.S. dollar, we see that the U.S. dollar continue to move up. Remember, we're talking about this trend line here, and this is somewhere around 107. So we're gonna see what it get up to this 107. Oil also got a crazy week, a little bit of a volatile week last week. It actually dipped back down below this 38.2, below this 102. And it got a nice bounce back up. Right now, sitting at 110.49. So with this little bit of a hangman type of a candle here. So we'll see whether it come back down and retest this 102 next week, or will we be able to get a bounce and continue to move up toward this $130 level. And look at silver. Silver did not hold this 22 level. Remember, I was talking about waiting for it to come down to the 22 and then see how it will react on the price action and see could we pick off some possible swing long setup and play it back up. And as you can see, it did not hold this 22. Instead, it came down to this 20 and a half area, essentially these low range here. Okay, so right now we're gonna see would this thing be able to hold here and get a bounce up. So right now I'm not too crazy about silver right now, and if there is a bounce, it could be bouncing back up to do a little bit of a back test on the 22 area. So gonna take a little bit more of a consolidation here before I will take a look at silver, because there's also a little bit of a downtrend here on this trend line. So we'll see. Right now, we'll just kind of keep an eye on silver to see what it'll be able to hold this 20 and a half. And if it doesn't, then we basically could take a look at the possibility of coming back down at 16 and a half here. Now, gold is getting quite interesting. Remember, I was talking about, as long as gold stay above this trend line, I'm still looking for gold to continue its uptrend. So if it come down to this 1804 and chop around, that might be a good possibility of a long setup. Look for a long setup to play for a bounce back up. And with the stop maybe just underneath that, maybe about 1780, this low here, just underneath this low. So we'll see, but certainly I am keeping an eye on gold, get more interested in gold than silver right now. So we'll see, because the dollar is quite strong right now, and that will probably hold down the precious metal. So we got to be careful, because if the US dollar go to that 107, we could see gold break down and come back down to this this zone here between this $1,700 level. Now let's take a look at the SPY, the ETF for the S&P 500. Here we see that it came down to this 272 extension here based on this particular swing. Right now, we're basically looking at this new composite volume profile to see would it be able to bounce back up to this value area low. And that would be somewhere around 415, 416 level here. So if we come here, this basically force 1682. So, and also there's this, remember this February low, this 410 here. So watch for a back test of this 410. So on a bounce, that's basically what we're going to be keeping an eye on for this 410. But if it failed, then we're basically looking for a pullback to this 380. Okay, so and if we take a look at the weekly range here, the weekly price. So basically looking from this pandemic low to the all-time high, we have a 382 retracement at 380. So that's basically where the pullback is that we're going to keep an eye on. Okay, and also we notice that there is this composite point of control somewhere around this 390. So that's another level to keep an eye on. But we basically looking to see what this low be get tested. If it failed to continue to move up and push back up, because we are looking for another flush to see will we get a positive diversion to put in to confirm that there is this intermediate bottom. Right. So right now that's basically what we're keeping an eye out for. And here's the QQQ, the ETF for the Nasdaq 100. You see we have a symmetry move, this 100% measure move here. And right now it is bouncing back. We're looking for the price to move down to this zone here and actually exceeded that. So right now it's moving back up, and we also have this new composite volume profile with the value area low here at the 317.45. We want to see would it be able to come up here and try to test this level and then get a push back down. So we're looking for a back test of the value area low. this composite value low at 317.45. Now, if we come back down, then we're essentially looking for the retracement of this bigger range here. And if we take a look at this weekly price range, there is this 50% level here, this retracement at 286.82, and it came below that last week. And right now we're essentially looking for it to come back down for this back test and see what it come down and hold this level or get a nice bounce after it tests that low. And if it unable to hold this low, then we're essentially looking at this 618 at 263.60 or this 618 at 258. Okay, so that's basically between 263 and 258. So that's what we are watching for the QQQ. But if it bounces back up, look at the possibility of 317.45. And look at the Russell 2000 ETF, the IWM. We also see that it came down and took out the 170 level and got a nice bounce back up. So right now, we're basically looking to see would it be able to get back up above this 184, essentially this new composite value area low. So, and come back and back test this and see would it be able to continue to move up. If it push back, then we're essentially looking at this low here to see would it be able to essentially hold this 165.71. And if we look at this weekly chart here, you can see that there is this 50% retracement here at 170, right? And it came down last week and tested at 170, and there is a zone here, this low volume zone around 165.71. So we're going to be watching to see would it be able to come down and hold this zone and get a bounce. If it come up here, get a back test and fail, and it pushes back, and that's basically what we want to see. Would that be the flush that we're looking for? So in summary, looking at the market sentiment and also the market internal, it seems like that we are seeing some extreme in the on the downside there, and also the fear level that the market participants have experienced in the last week or so. But right now, there seems to be less fearful, and also some of the internal seems to indicate that we might have seen the extreme. So the next time that we see the SP500 or the other major market indexes come down and put in a lower low, we want to keep an eye on those internal to see or they continue to push lower, or they are basically giving us a positive divergence. And if it is, if they are giving us a positive divergence, then that could be the sign, a slight confirmation to tell us that the bottom for this pullback might have been formed. Right now, it appears that the internal bottom might have been made. So right now, we just need to see a little bit of a confirmation to get one last flush and see how the internal will behave with that next flush. Now, I want to leave you with this. Here's the intraday chart of the internals and also the VIX. But the things that I want you to focus on here is, here's the S&P 500. You see the up-down volume ratio here. You see the extreme down here on this particular day. And this is where the S&P 500 is. And also notice last Thursday when the S&P 500 put in a new 52-week low here, and you see the up-down volume ratio was not even close to this extreme level here, because we're only looking at a 1.2 in favor of the down volume, 1.2 to 1. Okay? And also the other thing is, look at the extreme of the number of issues, the number of the decline outnumber the advancing issue on the daily advance decline. You look at the extreme here, right, and it was over 2,500, and similarly here it was over 2,500. And look at the S&P 500 level, And here on Thursday, last Thursday, we saw a low, new 52-week low on the S&P 500, and the number of declining issue over the advancing issue is only 1,100 or so. So you can see that it has improved almost by by half, right? Because this over here is over 2,600, and here is only 1,100. Okay, so now although the number of the stock making new low did not change, because we saw some extreme number of new 52-week low versus new 52-week high. But the advanced decline and the up-down volume ratio definitely have improved quite a bit compared to these extreme level down here a week ago, right? That was on Monday. So when you compare that Monday to Thursday, there's quite a contrast when we look at it in this perspective. So keep an eye out for possible another low on the S&P 500. To take out this low, will we get another extreme on the up-down volume ratio or the advanced decline? And if we don't see that type of extreme level and something like this, that could be a clue for us to look for a turn of the market direction. I hope you find this video to be informative, and don't forget to smash the thumbs up to help me promote this video on YouTube. Thank you for watching, and stay safe.